Then on the next page, after providing additional information, the requirement B is something like this. Complete the statement of changes in equity for the year ended 31 December 2024. And here we have some prompts, the information given for January 1 and December 31. Additional information number 1 is on 1 August 2024, the directors had made a bonus of 2 ordinary shares for every 3 ordinary shares held at that date. The company policy is to maintain reserves in their most flexible form. Ordinary shares have a face value of $0.5 each. For the bonus issue on August 1, we do not know the share capital as of January 1. However, the share capital of December 31 is $900,000 and this is given. Any changes in the share capital occurred exactly only on August 1 because of the bonus issue, right? This means that the share capital before the bonus issue on August 1 was the same as the share capital on January 1. So let's assume that the share capital on January 1 is X. Since the face value of each share is $0.5, so dividing X by $0.5 gives us the total number of shares, which is 2X. We have converted the amount of share capital into the number of shares because of the bonus issue is in terms of number of shares. The situation is like this. For every 3 ordinary shares held, 2 bonus shares are being issued. Well, multiplying this ratio by the existing number of shares gives us the number of bonus shares. Okay, if we multiply this by 0.5, we get the value of bonus shares issued. Okay, we are given that the share capital on December 31 is $900,000. This means when we add the bonus share capital to the January 1 share capital of X, the total share capital becomes 900,000, right? Simplifying this, we get the value of X as $540,000. This means that the share capital on January 1 was $540,000 and it was the same on August 1 before the bonus issue. Okay, so the value of bonus shares issued becomes 360,000. Now the question arises, which reserves will be used for this bonus issue? And for this, the company's policy is written like this. The company policy is to maintain reserves in their most flexible form. And this is very important to understand. Most flexible form. Most flexible form means keeping reserves in a form that gives the company the greatest freedom to use them. You must understand that different reserves have different levels of flexibility. For example, retained earnings are the most flexible reserves. They can be used for dividends, bonus shares, reinvestment, or any purpose. Okay. Whereas the share premium reserves is comparatively less flexible. It can only be used for specific purposes such as the bonus shares or writing off the expenses or premium on redemption, etc. Okay. And as far as the revaluation reserves is concerned, it is the least flexible reserve. It is usually used for revaluation losses and sometimes for the bonus shares. Okay. Well, what does this policy means? When the company needs to use reserves, for example, for a bonus issue, which reserves should it use first? The least flexible first or the most flexible first? You need to think it very carefully, because if you use retained earnings, which are the most flexible form of reserve for the bonus issue, then the flexibility may lost. Whereas the company wants to keep reserves in their most flexible form, because if you're using the retained earnings, that means you are using them. And if you use share on premium reserves, which is slightly a lesser flexible reserves first, then you are saving actually the retained earnings for the future dividends or other needs. Therefore, maintaining reserves in their most flexible form means first use only those reserves that are least flexible, okay? So that the most flexible reserves like retained earnings are preserved for future distribution or general use. Okay, I hope this point is clear now. Therefore, for the bonus issue of $360,000, we use the entire share premium of $120,000, and for the remaining $240,000 of the bonus issue, we use the retained earnings. So the total for the bonus issue row becomes 0. Additional information number 2 is on 1 October 2024, the directors had paid a dividend of $0.03 per share on all shares in issue at this date. Since after the bonus issue on August 1, the share capital had become $900,000. So the dividend will be paid on this issued capital on October 1. The lesser flexible share premium reserves has already been exhausted. So for the dividend payment, we use the retained earnings. The total for the dividend row becomes negative. Okay. Additional information number 3 is written at 31 December 2024. The directors decided to revalue the property to $680,000. For this, we go back to the beginning of the question and see that the property valuation is $785,400. But the directors have decided to revalue it and now record it at $680,000. I mean, it is being recorded at a lower price than before. So the difference between these two amounts is $105,400. For this amount of difference, we will use the revaluation reserves, which is the least flexible form of reserve and is created for only such purposes. We use the entire amount of $80,000, and for the remaining $25,400, we use again the retained earnings. So the total for this row becomes $105,400. All right, we have considered all the additional information. Oh, we need to hold on. A very important element of the statement of changes in equity was about to be missed, and that is profit for the year. We have calculated the correct revised profit, which is $73,500. We will add this to the retained earnings, and the total for this row is written as $73,500. Well, on December 31, the total share capital is already given. Share premium and revaluation reserves have been completely used up, and the total retained earnings becomes $84,900, and the total of the final column, the total column, becomes $984,900. I hope you have understood. The distribution of marks is given somewhere like this in the mark scheme.